The tribe has spoken. So today's Monday, and I went in our super secret members Facebook group and I asked, guys, it's a big week here, right? With the Fed and the ECB both providing updates on monetary policy and Apple reporting earnings on Thursday. I didn't even include the jobs data coming out Friday. And I said, what would you guys like to see me analyze most this week? And you can see 58% picked the SPY S&P 500 ETF, so I'm going to start with that. Now, if you're wondering about these other tickers that are here, I will cover both of these in my special live session I'm having Tuesday at 8 p.m. Eastern. If you haven't seen an invite, it's one of two reasons. It's because you're already clued in to everything that's going on with my momentum indicator and more, or because you haven't been checking your email and looking at your messages. So be sure to look at your email, look at your messages, and I will dive into both of those tickers live in that session. So let's look at the SPY here right now to see where we are in this very interesting week. All right, so what you see here are three charts of the S&P 500 ETF. Now, if you're new here, I'm Hema Reddy, and I use price, time, and momentum, May is for momentum, to boost my trading and that of my tribes. Now, specifically here, I have a monthly chart, a weekly chart, and a daily chart. Now, I have not touched this specific set of charts in a while. I used to use these for a set of analysis I used to do and package up a different way, but I've retired that. I'm optimizing my processes. And so I thought it'd be good to take a chart that I haven't touched in a while and update it in front of you. Top-down approach, but this time moving from one time frame to the other instead of doing it all on one time frame, okay? Or instead of doing it all on one chart. So here we go. This is the monthly chart of the S&P 500 ETF. Now you can see here that the SPY has been higher since October, but it's still contained within this August range. And right now, the RSI power zones, my favorite momentum indicator, I'll be diving deep into them in that live session this week. They are continuing to lift higher, and there's room for further upside. It's just a matter of whether we're actually going to break up higher immediately or if there's more sideways noise to come. So right here on the monthly chart, okay, I see support at this level right here that I'm going to anchor to, 380.65. It's the most recent price low between the recent bars. I also see resistance here at 431.73. All right. So we're going to remember those numbers, 380.65, 431.73, and then I'm going to go over to the weekly chart. So the first thing I'm going to do, it's kind of like when you're remembering a telephone number, I'm going to just jot down those levels. Okay, 431.73 and 380.65. All right, so now I have the same numbers, the same lines on the weekly chart that I did on the monthly chart. All right. This way, when I have analysis like you see here, that's based on market timing, I don't have to squish it all down to study the monthly chart. I can still keep it on the weekly chart, okay? So this is another way to do multi-time frame analysis where you can actually do it on all the charts separately. All right. So now looking at this SPY weekly chart, you can see a much cleaner move here, this lift off of this low from March 17th. But there was this big candle last week that wasn't quite an outside range. Actually, it was an outside range. Excuse me. It had a higher high than the prior week and a lower low. So what this is doing is creating a new lift off point for the SPY. Now, it still has resistance to deal with from August, and now I'm going to come in and I'm actually going to identify multiple points of resistance within that range. So I'm going to take away the horizontal line and just use this modified Fibonacci. And why I'm doing this and how I'm doing this, guys, I get into all of this tied in with my momentum training. So if you don't understand why I'm drawing this right here, then you need to be there with me on Tuesday, okay? Now, this provides me 3 points of resistance, 421.22, 426.48, and 431.73. So you can see now after the monthly, I now have 3 areas of resistance, the weekly. And on the support side, okay, I'm also going to have that. And I'm going to label those pink. So I'm going to take away the horizontal line and focus in on these levels. So guys, we are narrowing in on the SPY and looking at the recent levels on the weekly after studying the monthly. Okay, now I want to take this down to the daily time frame. I'm not going to memorize all 6 of these numbers. I won't need that. And what I do want to look at is this most recent resistance here from February that has not been breached. and this most recent support that we just laid out as well in last week's outside bar range. Remember, the whole weekly bar was an outside range. All right, so now I'm going to do that little telephone game, right? Like when you hear a phone number and then you got to call on the other line and you memorize in between. So 418-31, 403-78. Okay, 418-31, 403-78. 418-31, 403-78. 418-31, 403-78. So 418-31, 403-78. There you go, okay? Now again, this is all old leftover analysis. We're not going to get into it right now, but with these short-term levels that I have here, okay, I want you to notice that there was a support trend line back here that joined the December 23rd, the December 28th, and was confirmed on January 3rd, okay? And price stayed above it, then it chopped around it a little bit and fell. And you might think, well, it's time to throw it out off your charts. But look at how by staying on, it has guided the recent price action. The high on April 4th, the high on April 18th, we're not able to exceed that level. So I'm not going to put too much weight on it, but that is evidence of resistance that may be residual that I want to keep an eye on. Now, coming back to those bigger levels we saw in the weekly, remember I said I'm not going to transpose all three of them at a time. That's because I want the daily chart version of those key levels. So I'm going to do the same type of technique, which again, if you're not recognizing the technique I'm doing, this is part of my momentum approach. Come join me in my live training this week. And I'm going to repeat that for support. And when you look at this on the daily chart, it's going a couple different ways, in the sense that there's recent action on top of the more further away action, okay? Okay, so all of these lines I just drew, take away these broad horizontal lines, what is this telling me? Now I'm gonna come back and tie in the RSI power zones down below, which are lifting from the bull support power zone. So these are specific zones on this tweak on a momentum indicator, and there's a new way you can use them if you identify and lay out the RSI this way. So everyone has a default RSI indicator in their platforms, right? Relative Strength Index. The key is you got to know that that was actually designed for a specific purpose, and it's not what you think. So my twist on the indicator allows it to open up to other purposes. And right now what this is helping me identify is that there is room, there's fuel behind this move higher, as well as a barrier that's close by. So what I suspect over the next several days with the SPY is the following, okay? So everything that I just analyzed is leading me to this. Number one, I think that for the next couple days into the Fed meeting, we're probably going to stay in this range below 418.31, kind of just chopping around. Now, as of this moment, last I checked, the Fed is expected to raise interest rates by 25 basis points. So if they do that, then the market will be quote unquote happy and probably just continue higher, maybe initial reaction, depending on what Chair Powell says. And if it does, then breaking above 418.31, the next upside target would be 426.88. Okay, so that's big picture on the daily chart. Along the way, between that resistance, 418.31 and 426.88, this trend line could provide some short-term resistance. So that kind of maps out what will happen if the SPY continues higher from here. However, there is a disconnect going on between price and momentum right here, okay? And if you know how to identify that, then you also know that it might suggest that there's going to be a little bit more weakness ahead before prices resume higher. So if there's weakness from this area we're at, around 415.60, in the short term, then I think that actually will probably stop around 407.84 or above. I don't think it'll push much lower than that. Again, I don't have a crystal ball. I'm just going off of my experience here. And if that's the case, and if the RSI power zones return to the bull support power zone, what that happening, that'll be a great opportunity to potentially buy back into this market if you missed it back here, or back here, or back here. So I'm not just talking to the swing traders out there, okay? The swing traders are those of you who are coming in and looking for a trade to last anywhere from several hours to several days, weeks, maybe even months. But the day traders are those of you who are looking to come in and put on a direct trade or an option strategy and basically be out of the market by the end of the day, by 4 o'clock New York time. And so the day traders can use this analysis to guide their short-term trades. And just like how I'm showing you analysis that works for swing and day trading, so do my individual tools, okay? My RSI Power Zones momentum technique, which again, I'm diving into live this week. I don't always go live, so when I do, you want to be there, is something you can use on any time frame, and I'm going to show you that live. My forecasting techniques, which I didn't touch on here, can be used on any time frame. I'll share more on my forecast for the S&P markets in my Skinny on the Markets reports, okay? So it won't be directly on the SPY, but it'll be on the E-mini S&P 500 futures, and you guys get those reports every morning from me. And last but not least is price action, the direct actual candles. And that is what I just spent a lot of time on now, right? Price action in the form of resistance, which is ceilings above price, or support, which is floors below price. So this was like a little mini class for you. I hope you enjoyed it. I wanted to give us a chance to get more detailed and also show you my raw analysis, right? Me pulling up charts I haven't looked at in a while, those specific charts, I mean. I'm very attuned to what the S&P is doing, but demonstrating to you how you can do multi-time frame analysis on multiple separate charts, but still transpose the data. That way, those of you who use different indicators on different time frames or different moving average settings or other techniques on top of your HEMA Ready tools, that way you don't mess with them, okay? You're able to still do that without having to change the same chart around. All right, we will see what these markets bring. I hope those of you who voted, the 58% of you who voted for the SPY, got what you needed out of this. Go back and let me know in the comments to this video or the comments in our members group what more I can do to help, what questions you have. And I look forward to seeing many of you live tomorrow night. That's Tuesday, May 2nd at 8 p.m. Eastern, where we're going to go deep into momentum, including a very close look at Apple and more. Catch you on the inside.